Let's take another look at the share price of Alimentation Couche-Tard. This, of course, is the Laval, Quebec-based global convenience store and gas station operator, a giant in that sector. It missed expectations for the second quarter, its fiscal second quarter, which was reported early this morning. It did, however, boost its dividend by 11%. It also offered an update on its attempt to acquire the 7-Eleven convenience store chain, saying it was confident in its ability to finance and execute that transaction and that it would be persistent in its approach towards a board of directors and management in Japan that seems less than enthusiastic about that pursuit. For more on all of this and a look ahead to bank earnings season as well, let's go to an old friend of this station, Andrew Pyle, Senior Investment Advisor, Senior Portfolio Manager at CIBC Wood Gundy. He joins us from Peterborough, Ontario. Andrew, thanks a lot for joining us. Let's talk about Couche-Tard. This is a company with a almost universally highly respected management team, a long track record of success in both M&A and in corporate execution, delivering earnings and revenue growth, has not had a great 2024. The stock is basically flat this year, and we've seen another quarter of soft results this morning. What do you think?
Well, good morning, Paul, and great to be here. It has been a frustrating year, I think, for Couche-Tard. Although, Paul, if you look at the analyst community is still showing a high degree of faith in this company's ability to turn this around and to grow revenues and the bottom line into the next fiscal year. You can see that in terms of where the targets are for now. In terms of the deal, the odds continue to slip that this deal gets done. We've seen a lot of pushback, obviously, in Japan. We've seen calls for the company to, basically do it at home at a much higher price tag than what Couche-Tard has been offering in this so far friendly attempt to merge the company. So that doesn't look great, but I do think the analyst community is still positive on this company going forward.
Would you be a buyer of the stock at these levels? We just saw its one-year performance. You're right about analysts. The analyst community, there are 15 analysts who cover the stock. 11 say buy, 3 say hold, only 1 says sell. The aggregate or the composite price target derived from Bloomberg survey is about $10 higher than the prevailing share price of $77.64. Would you be a buyer at these levels, Andrew?
Well, Paul, ironically, I think if this deal does not go through, given the amount of leverage that's contained in the offering, the stock actually looks more attractive, in my opinion, going forward. So I think, and again, you're seeing that reflect in the community. So, if we don't see this deal come to fruition, if we can see some improvement, in the consumer sector, which is key for this company, right? And that's really what has been dragging behind, what we thought we would see in this current quarter, is really that trepidation by U.S. consumers. If we can see that lift, if the effects of lower interest rates in the States, if improved consumer confidence post-election starts to drive consumers more and more, then I think this company looks good going into the next fiscal year. Without that deal, I think it probably does start to look more of a buy.
Okay, let's move on to the Canadian banks. We're 1 week away now from the kickoff of the fiscal fourth quarter earnings season for the Canadian banks. What are some of the themes that you'll be watching for? What do you expect to see?
Well, I think the themes are going to be, as we've seen them in the past, Paul, and that is a focus on real estate in Canada. Where is the consumer? Where's the overall state of the economy right now? We have had considerable stimulus coming down the pipe from the Bank of Canada in terms of rate cuts. We expect that to continue. That's good news, I think, for the sector as a whole. I think the consumer is still in decent shape. We'll have to see what this holiday shopping season looks like. But that's going to be, analysts are going to be laser focused on how the banks are dealing with the real estate right now. Not only residential, but also commercial. We've seen provisions taken up to date that has impacted earnings in some banks, but I think that is going to be the key focus a week from now.
The S&P TSX Composite Index, we can take a look at it now. It's now down about 0.5 percentage point. The U.S. markets, for the most part, are up. I'm wondering if this is some market reaction to Donald Trump's announcement on Truth Social last night that he plans a 25% tariff on Canadian goods shipped to the U.S. The loonie, of course, is way down on that news. What are your thoughts, Andrew, on this latest threat from Donald Trump?
Well, things have been calm for too long, Paul. I mean, it was inevitable that we were going to see a little bit of chaos thrown into the mix before we went into the holiday season. And for now, I think the markets are going to take a wait-and-see approach to January 20th. I mean, to basically implement the tariffs that we have seen in Truth Social this morning is basically going to take the 2019 scenario that developed after the last Trump administration and accelerate it and advance it to 2025. It's questionable whether some of his cabinet colleagues on the economic side are going to think that that's a prudent move. Clearly not good news for Canada if that gets implemented. We are going to see a direct impact on the Canadian economy. It's going to cause us all, I think, to maybe rewrite our forecast for the TSX in 2025. But I think for now, we're just going to wait and see if this is just bluster or if this is actually going to be implemented on day one.